Hello guys and welcome back to the channel. So in this video we're going to take a nerdy look at Tesla financials and how they will be affected after the massive price cuts. And it's also amazing to revisit my Tesla valuation model because there has been a lot of changes. It's a new year and the price has dropped massively. So I want to see how the stock price fares compared to my stock valuation. And by the way, this table that we're going to look at, you can of course download for free from I mean, it's included in the Patreon, which is $5 a month if you want to go ahead and support the channel. And there's other exclusive content there, such as my detailed description of my stock market strategy, which is a very, very good video that I feel it's about a topic that is not covered in YouTube Finance, and I think is very important for you to know. So as always, if you like this content, please make sure you are subscribed. And if you want to follow me, you can follow me on Twitter. So let's begin the video. This is the table, by the way, that you can download if you join Patreon. You just click on File, and then you make a copy, and then you save it to your own Google Drive, and then you can edit and play around with the numbers if you want to. What's really interesting is I just made a similar video about Palantir, and I made a point there that there isn't really anybody who is arguing about if Palantir is a good company or not. Everybody can see that Palantir is a fantastic company, and the people who are negative or perceived as negative on Palantir, they're actually negative on the valuation. And I was looking at Tesla, and there is a similar thing with Tesla because you cannot really find anybody who is negative on Tesla increasing production and becoming a very major player in the auto game. So everybody agrees on this. So again, where you can have disagreements is what type of margins is Tesla going to have in the future and how big they are going to grow. So it's very important to understand that nobody is arguing that Tesla is going to grow. The question is, are they going to have the same boring margins as Ford and GM, or they're going to be special and have much higher margins? And if you are buying Tesla at any price, this is what you're betting on. If you would take away the future margin from the price story, then you would get a very boring and very, very cheap stock, and then you're basically wasting your money. So it's very important to understand that when you're buying a stock, what are you betting on and why? And in this table, what's cool is that when I first did the table, it was May 23, 2022, and the yellow numbers is how the numbers were at that time. And these white numbers that you see here are how the numbers are today on the 15th of January, 2023. So you can see that the market cap almost halved. But what's insane is that Tesla has been increasing the production and every part of their financials has been improving rapidly. So the P is almost 1/3 of what it was when I was looking at this in May. And what's even more insane is that we obviously need to see the earnings come out, but I heard rumors that Tesla possibly could do a $5 billion EBIT or EBIT. And that would mean that they have a 20 billion run rate. And if you do that multiplication with the 20 billion run rate, then the current market cap would put them at 19.3 forward P. And what's insane about this is that this is not even really a forward P because they might have already done it in Q4. So this P number is still on the way down. Then look at the free cash flow. This is a trailing 12-month free cash flow of 9 billion, and look at the increase. This is 3 quarters from each other, and look at the freaking increase. Then the price to sales ratio has come down also considerably. The PAG ratio is just insane. Peter Lynch said that if a company is between 1 and 2 PAG ratio, it's a good buy. And when it's below a 1 PAG ratio, it's a steal. And Tesla has arrived in the steal territory. And there is a third metric, which is important later in the table, that the stock share count has also tripled because they had a split and some other diluting factors. So I actually had to Google how much is the outstanding shares currently, and I got this number. So what's very interesting is that my projections for Tesla have been always very conservative. Many people believe that they will, grow their deliveries by 50, and there was mega bulls that were even believing that it would be more than that. You can see that this was my prediction for 2022 that I made in May, and this number is the actual, and I came in less than 1% close to the number, and they basically beat my number. So that's a very good projection right there. I gotta pat myself on the back. Obviously, I'm waiting for the earnings call to fully update these numbers. And as I explain in my videos, I'm a very long-term investor, so I don't really care. When I buy, I want to see what I think the stock is going to be worth in 2025, and even more important for me, in 2030. So this is a very simplified table where I basically have the revenue, I slap on an operating margin, and then you get an operating income or a profit, and then you times that by a PE, right? And then the big question is, what is the PE going to be at that time? And obviously this depends on how bearish and or bullish the Fed is, and how the macro is at that time, and how fast Tesla is growing at that time. So let's look at it. In 2025, that's my first point of interest. If they deliver the vehicles, I am thinking with a 40% year-over-year growth. And after the price cuts, this is very, very likely in terms of the numbers, right? The real question is, are they going to hit the margin? And before I do any updates on my margin, I have to listen to the earnings call, because it's a bit tricky. For example, Tesla has been raising the prices very much in 2020, and they have been ramping two factories, which according to Elon Musk have been money furnaces. They had a 10% duty in the EU that they were paying when they were shipping cars from Fremont to Europe. And nobody's talking about the fact that when they ramp up Berlin and they decrease the prices by 10%, it basically it doesn't have any effect on Tesla margins, because they are not paying the 10% duty that they were paying before. So that price decrease is not even that big of a decrease, right? And then there is a lot of innovation that they're reportedly trying in Berlin. So I really want to see the earnings call to see what happens to the margin. Obviously, if the margin has to be revised down, that is a huge effect on the price. However, we know that Tesla is working on full self-driving, and we know that they're working on the robotaxi network, and the Tesla bot is not even on the map. So you're basically, nobody's thinking with that. You're getting that for free when you're buying the company currently. So I believe that these things will push up the margin back to 20%. And as you can see in 2026, I'm even thinking with 26% margin, the 25% margin. Obviously, this is a big question mark. Tesla can be delayed. That has happened before, or the margins can be not as good as I think. So that's a big risk factor in the table. So we come to 2025, 206 billion yearly revenue, 20% profit. That's a 41 billion EBIT. This is the amount of shares. And if we slap a 40p on Tesla, which you could argue is high or low, but if we look at that point, I'm still thinking that they're growing 40% per year, which is very, very likely. It's still a one PAG ratio. If they have any tech things in their valuation, meaning FSD or robotaxi network, this 40 is a very, very low number. So I would consider that this is a very conservative estimate. And that would give a market cap of 1.6 trillion, which if you divide it back with the shares, it would give you a share price of $467. Now, at the time of filming this video, the current stock price is $122. And here's the nice thing. So here is where you can write how much return you are happy with on your money. So for example, if I want to earn 10% per year, compounded annual growth, And I believe that this is what the stock price is going to be. As long as the stock price is below $335, for me, it's a good deal and it's a buy. Normally, I like to go for a 30% year-on-year compounded annual return. And I like to do that because I like to swing for the fences. I fully understand that these things could sound unrealistic and they might not happen. But hey, if I only get a 15%, I'm still very happy. And I like to have a margin of safety. I like to, set high targets. And if I still don't reach them, there can be so many things, as this year has proven. Elon can buy another Twitter, so many things can happen. So we need that margin of safety. So if I write my normal number, then $186 share price today would be the bargain of the century for me, as long as it's below. But you can see the price is significantly below. It's at 122. So I have to even play around. It would give more than a 40% compounded annual return, more than a 42. Let's say if it gives a 45, more than a 45. Jesus Christ, let's say 49. Okay, 47. 40%, 47% compounded annual return the current stock price would give. Crazy. This is very crazy. So let's put it back to my 30 and let's look out to my most important, which is 2030. Again, we jumped again. Why does Google do this to me? So here in 2030, I'm counting with a 25% profit margin. Again, this is based on FSD. And if you join Patreon, you can, of course, experiment with this and try what if the margin is 15% and try different things. But 25% is my prediction. And this would give a share price of $1,900. And the stock price for me to have a 30% compounded annual return until 2030, which is 7 years out, it would have to be $182. And we are currently at $122. So this is insane. Tesla is, this is what I've been saying in my videos, currently my favorite stock. It's the best risk reward because, hey, what if the growth slows down? And what if many things don't come true? Then I think because Tesla is already a profitable company, they don't need to raise cash, there's zero risk of bankruptcy, maybe your money is going to stay the same, but hey, you didn't lose it. This is your risk, right? And what is your reward? Your reward is you can 3x your money, or you can 10x your money if you... Can you 10x your money? Yeah, you can basically 10x your money if you keep it possibly until 2030. So that is crazy. So now to answer a second question, do I think that the stock price is going to go lower? And I cannot answer this question. Nobody knows what the stock price is going to do. And it's also not my place to, make predictions on that. But all I can tell you is when you're faced with crazy bargain deals, just take them. And if the stock goes lower, just look for ways how you can buy more. Again, there's zero bankruptcies. They are very resilient in this current macro, and they have Elon Musk over there. So it's a fantastic company and a fantastic opportunity. So thank you so much for watching. Please let me know what you think. What do you think Tesla is going to do in the future? And let me know if you disagree with anything in the comments. Please make sure you subscribe to the channel. And if you want, check out the Patreon. That would make me happy. And I'll see you in the next video. Bye-bye.